Welcome to our Indirect Cost Rate education series. This series has been developed to assist consultants in creating an indirect cost rate schedule, or ICR schedule, compliant with the cost accounting principles of the Federal Acquisition Regulations, commonly known as the FAR. In this module, we will cover some common expressly unallowable expenses per the FAR. To supplement your understanding, as we go through this module, we encourage you to listen to the narration and pause to read the content as needed. As you proceed, please take note of any questions or feedback you have and send them to our team to the email address and the resources found in the module's online description. And, at the conclusion of the module, we will have a link to a short anonymous evaluation for you to provide us with feedback. This feedback will help us in identifying and developing additional topics of interest to those working with ODOT. Now, let us begin and work together to achieve great things. In this module, we will discuss the federal regulation associated with the unallowable expense and any directly associated costs and adjustments that can be made when creating your ICR schedule. This includes a review of allowable and unallowable expenses, discussion of federal cost principles, and the FAR references are needed when you input adjustments for unallowable expenses into the ICR schedule. Please note, this module is for educational purposes to help improve the success of the billing rate process when working with ODOT. It does not replace or override any law and contractual obligations and requirements and should not be considered accounting advice. These modules are not all-inclusive and do not represent any obligations to the consultant. Each consultant must review their contract terms and seek their own accounting advice. You should set up separate general ledger accounts to track accounts for all unallowable expenses at the point of entry. This means when you enter the expense into the accounting system, separate accounts will help prevent unallowable expense items from being left in the indirect cost rate schedule. Segregating unallowable expenses complies with the cost principles in 48 CFR Part 31, which requires firms to certify that all unallowable costs are adjusted out of the indirect cost rate schedule, and the certification requirements from 23 CFR 172. For additional information on unallowable expenses, refer to Chapter 8 in the ODOT Audit Guide. To claim expenses on your indirect cost rate schedule, the expenses must be allowable per the Federal Acquisition Regulations, 48 CFR Part 31. To be allowable, they must be reasonable, allocable, and conform to the terms of the contract. It is your responsibility to account for costs appropriately. A cost is considered reasonable if, in its nature and amounts, a prudent person would expense in the conduct of a competitive business, is a generally accepted sound business practice, is an ordinary or necessary business expense, and there is no significant deviation from the consultant's established practices. Additionally, the burden of proof is on the firm to support an expense is reasonable. For expenses to be allocable, the cost must be incurred specifically for the contract or benefits both the contract and other work or is necessary for the overall operation of the business. Please refer to the ODOT Audit and Accounting Guide, Chapter 4 for more cost principles information. The following set of slides goes over some common unallowable costs. As we referenced in the previous slide, expenses must be allowable to be claimed on your ICR schedule, and there are some categories of expenses that are expressly unallowable. Here we will review some categories that are not allowable by the federal regulations in a firm's indirect cost rate under any circumstances. To help make the process easier, please make sure to familiarize yourself with these and possible additional categories as you are developing your ICR schedule. Entertainment is considered an expressly unallowable expense. Entertainment includes but may not be limited to sporting or entertainment and holiday events, social activities, country clubs, and any civic or community organization memberships. Interest including any interest on borrowing, or any cost of financing or refinancing, including any costs for lines of credit or credit cards. You must remove alcohol from your ICR schedule as well. Your company may have meal expenses that include alcohol, and this is a good example of why allowable and unallowable accounts are necessary so you can carve out allowable and unallowable expenses like the food portion of the meal from the alcohol and associated taxes from meal expenses. If this separation isn't accounted for, the entire meal expense may be considered unallowable. Please refer to the Oregon Accounting Manual for further information on travel, per diem, and other Oregon-specific limitations. Another expressly unallowable cost category is your advertising and promotional expenses. This includes expenses related to the general advertising for the company or enhancing the firm's image or bringing favorable attention to the firm, most trade shows, any promotional material or souvenirs, and corporate celebrations. As mentioned in the module titled, Numbers on the ICR Schedule, The ODOT Audit and Accounting Guide uses the term marketing to identify some unallowable types of general business selling efforts, as the term, marketing, is too general and not defined in the Federal Acquisition Regulations or FARs. Any contributions or donations including any cash, property, service contributions or donations. Bad debt is also an unallowable expense to include any losses from uncollected account receivables, collection fees, legal expenses, and any directly associated costs. Lobbying and political activities are considered unallowable expenses. Anything that influences the outcome of elections or legislation and any portion of organization dues used for lobbying and advocacy are considered unallowable. If you have any organization or reorganization costs, they are also considered unallowable. This will include any planning, attorney fees or labor for executing mergers and acquisitions, or raising capital. It is important to remember that any directly associated cost to an unallowable expense is also unallowable. Examples of these costs include labor associated with unallowable advertising or labor at a trade show booth. Both activities are considered a directly associated unallowable cost. Any payroll taxes paid for unallowable types of labor and unallocable types of bonuses, such as stock options, dividends, return on investments to owners, etc., as they are directly attributable to the unallowable activity. If you have vehicle expenses and they are deemed unallowable such as personal use, all associated costs to the vehicle are also unallowable. This will include any insurance, depreciation, fuel, repairs, and maintenance costs associated with that unallowable activity or use. It is important to note that the Code of Federal Regulations does not cover every element of cost. If a type of cost is not mentioned, it does not imply the cost is allowable. If in doubt, adjust the cost out of your ledger. A valuable resource for you to note is the ODOT Audit and Accounting Guide, as well as working directly with your own accountant, or feel free to contact the ODOT External Audit Services Group to ask questions about allowable or unallowable costs. Don't forget, an expense must be allowable, reasonable and allocable to be included in your indirect cost rate schedule. When filling in your ICR schedule, you must show all unallowable expense adjustments in the reference section at the bottom of the ICR schedule. Each adjustment must have the associated FAR reference attached to it and an explanation. The following is an illustration of where the unallowable adjustments, reference letters and the reference section are located on the ICR schedule. Here we have an illustration of an ICR schedule that includes unallowable expenses. You will place your firm's adjustments in the third column of the schedule, labeled for unallowable expenses or adjustments. Once you have made those adjustments, you will need to include a reference letter in the reference column of the schedule, which is usually to the right of the adjustment column. At the bottom of the schedule, you will correlate each reference letter or number with a detailed explanation. Next, we will go into the details of these entries. The adjustment noted with the letter A would have the dollar amount of $15,645 for unallowable contributions per 48 CFR Part 31.205-1. The adjustment noted with a B would have the dollar amount of $1,500 with an explanation it was adjusted out for unallowable advertising labor per 48 CFR 31.205-1 through 31.205-38. Remember, it is important to put the dollar amount of each adjustment, especially if there are multiple adjustments under one reference letter. Having the right tools and information is important to find success when learning the components of the ICR schedule, and we hope that this training module has provided you with that information as well as access to those tools. We appreciate you taking the time to watch this module and invite you to revisit and review the information anytime you want to improve your understanding. As a reminder, this module is for educational purposes to help improve the success of the billing rate process when working with ODOT. It does not replace or override any law, contractual obligations or requirements, and should not be considered accounting advice. These modules are not all-inclusive and do not represent any obligations to the consultant. Each consultant must review their contract terms and seek their own accounting advice. For the best success, make sure to visit our website to find more information to help you understand the indirect and direct costs and how to comply with the billing rate review process. If you have specific questions, please don't hesitate to ask. We are here to help. Our email contacts are linked in the course description or by using these top QR codes that are linked directly to the ODOT Billing Rate Oversight and External Audits web pages. Additionally, help us improve our information and develop future training presentations by filling out the short survey linked here by using the QR code or at the link found in the course description. We welcome your feedback. The survey also gives you an opportunity to sign up for regular newsletter communication from our office. Thank you for joining us.